Hello there and welcome to the Bitcoin Takeover podcast. This is season 16, episode 3, and the story of this episode is quite peculiar because I got an email from Charlie asking me if there's any chance that he can join the show to talk about his new Digital Gold project. So I took some time to look into it. Originally, we were supposed to record last week, and we had 2 moments when we had to postpone. I'm happy that this is finally happening. And in the meantime, I had more time to dig into what this Digital Gold project is. Charlie, you're saying that this is what Satoshi would build today. And I'm actually curious how this works and to go through this whole process to better understand what you're up to. So it's good to have you, Charlie. And we also have Digital Gold Jedi.
It's good to be here.
So what's the story, Charlie? You were such a Bitcoin bull when I first invited you on my show back in September, I think. You're wearing that happy shirt with your blue glasses. I think you still have the blue glasses on. And you're so bullish about Bitcoin. And now I read on the Digital Gold website that you're saying that Bitcoin did not become the medium of exchange that you expected. So you're building something else. What happened?
I'm super bullish on what Bitcoin became in the commodity sense, and it's still bullish that it's going to continue to rise and grow and distribute and be this amazing remover of poverty of people when they join our industry in different ways or build out different technologies. I'm spending a lot of time with my book and also doing like some mathematical work trying to optimize Bitcoin mining at the same time. But when I met my friend here almost a year ago, he approached Bitcoin to me as an experiment again, and a fun one. And that in the early days of Bitcoin, I remembered that the idea was just download a node and someone will send you free coins, whether it's on the Bitcoin Talk forums or the faucet. And that's really how we bootstrapped the whole industry and the whole network. And at some point, and not in a bad way, we had a huge amount of demand. Things changed. We had the block size wars. You've covered them extensively. And Bitcoin naturally morphed into this amazing thing that it became. But what it didn't become is the ability to send super cheap transactions in somewhat of a decentralized way. All those other blockchains that have launched, end up being scams because they take the trilemma problem, they remove the decentralization away in favor of like a lot faster transactions. And then they end up doing like ICOs and all these different like token related stuff. When I met John, it was like, why don't we bootstrap this same type of network in that same way and distribute it and have as many nodes, proof of participation, human nodes as possible. And it was really exciting to see because it was one of those problems that you'd really only know if it'll work until you launch it and just start asking people and talking about it and saying, download the node, we'll send you some coins, download the node, we'll send you some coins. And eventually, when we have 10,000 nodes, we can start selling coins on our website. It just seemed like, hey, if we get to 10,000 human people operating this decentralized protocol, that is faster. Bitcoin took years to get to that point. And then what? Then what can we achieve? And I don't know. It's this fun experiment to see what happens. And he's been working on this for 7 years, and here we are. It's launched and it's doing really well.
Yeah, for the record, what you're launching is a fork of Bitcoin Core. It has pretty much the same interface, but it runs this proof of stake consensus algorithm, and all 21 million coins have been pre-mined. And you're distributing them to people who sign up for free or something along these lines. And it's also supposed to be a stable coin, but in the white paper, you're not calling it a stable coin. I'm a bit confused in that regard because there was a change in the first version of the white paper that I read last week. It said that the price will be adjusted to the basket of goods, clothing, and a lot of other items. Now there's a monthly adjustment of 1%. And it's still unclear to me how this is going to work.
Which part of it? The end when it becomes, when it reaches its plateau and reaches parity to Bitcoin's current value because of the infrastructure size, the ability to transact that number of transactions, that volume, that dollar size value of those transactions for almost nothing, like no energy costs and that. If we can get those efficiencies, which we think we have, and we with adjustable block size and that, I think we can carry on, then yeah, we think that if we have 100 million users and we can do that volume of transactions and we've built that network across 100 million laptops and desktops using a proof of stake, then in fact, we should have parity to them in current value. They won't be here at that point. They'll be millions, I'm sure, by then. But we would reach that 100,000. After that, we thought about a basket of goods. You know, the real goal of this coin is not to make anyone wealthy, but to preserve buying power over time, so that the money that you work hard for today to be able to go buy some basic needs, food, clothing, shelter, transportation, energy, and communication, that in 10 years from now, you can still afford it if, in fact, you're now retired and living off what you had saved and could buy those things with 10 years earlier. So how do you do that? And we thought about different mechanisms. We thought about maybe doing, and I think the best idea would be sort of an app, but we're not a company, but we'd need some kind of a app that would do a crowdsource like a Gas Buddy, where people come together and put in the prices locally. And that'd be more trustworthy than the Bureau of Labor and Statistics, which fudges their numbers, keeps changing the algorithm on how they calculate it. And then they end up changing and revising those, revising the numbers later. And so you can't trust those numbers. So what do you do? And so we looked at, and that's what's in the new version of the white paper, what's the return if people were just to put it into the basket of Dow Jones industrial stocks? And it turns out that about every 6 years or so, including dividend reinvestment and that in stock splits, et cetera, you should have about a doubling of your money every 6 years or so. And for wealthy people, they always seem to keep up with inflation in that. So that just seems logical. And so at 1% compounded, or about 12.68% annually, it doubles about every 6 years and keeps up with the 100-year average for the Dow Jones Industrial. So that was the reason we changed that, because that way everybody, we want something people can rely on. And you can't rely on something if it's bouncing all over the place as far as how much it goes up each month or down to keep up with inflation. But if it's 1%, that should cover it. And it's something that those joining the community can agree to, or don't join the community. But that's that change, Vlad. That's what that was about.
Right, so you're talking about very large numbers here, hundreds of thousands of nodes, millions of users. What makes you think that this will be the project that gets there?
It might not. I don't think that any project has any guarantee.
We have nowhere to go but up.
What has been your reaction, Charlie, when you've shared this with people, and not just crypto people, but like just share it with people?
Crypto is really complicated. Bitcoin is great. It's fun to buy in an ETF, in a hardware wallet, or in Coinbase and Robinhood. But that idea of like being a part of an early network, people are really attracted to, like, I'm joining this network that's so small right now that my contribution is really important. You want me to just keep my computer open and run it. And people really like to be a part of something.
Do you remember BitTorrent, Charlie? Vlad, do you guys both remember BitTorrent?
Of course.
I remember
so
LimeWire,
cool, right?
and what was the other one? Napster.
Napster, LimeWire,
But
eDonkey,
Napster but Napster was centralized, guys. Before there was Bitcoin, there was BitTorrent. And BitTorrent was the idea that the centralized computing of Napster, which was shut down so easily when the FBI went into their warehouse, pulled the plugs, you couldn't do that if it was decentralized. And so Bram Cohen came up with this brilliant BitTorrent idea and made it real. And then you had LimeWire, and you had Mininova and Supernova, and you had eDonkey, and Kazaa was the biggest. And then, of course, Skype.
I remember Kazaa.
Right. But I loved being a part of that, because although my pipe was only letting out little bits, those bits were collecting and filling someone's pipe so they could get the media streamed to them in real time nearly. And that was just incredible to be a part of a network like that. And I feel the same thing with this. And I think it was the same with early Bitcoin. I wasn't there when it was on laptops and desktops. But that whole idea Charlie, you were telling a story the day that I met you about people being reluctant to put a Bitcoin wallet on their computer. And I think you were trying to give them like 1,000 Bitcoin or something. What was that story?
I sent my friend 50 Bitcoin and it never got to his wallet because we didn't understand at the time. It was so early in Bitcoin days that his computer at the time hadn't caught up with the blockchain. It just took a couple of minutes and it hadn't showed up. And I was like, damn, this thing is not working. And I was like so excited. It's like, wait, I sent it. Why are you not receiving it? But there was so much. I mean, there's so much about Bitcoin I still don't understand. I've been spending a lot of time understanding SHA-256 and everything related to quantum computing lately, and like it's just crazy physics and mathematics. So there's just so much about it. But Vlad,
when they
two
get
things.
those, but when they get
I would say nodes, right? The difference here, it's not so much as a proof of stake, it's more of like a proof of participation,
yes.
in that we can almost guarantee that it's a human running this on the other side. Whereas most other blockchains, as you know, use some node infrastructure company like Infura or whatever, and then they launch tens of thousands of nodes on Amazon Web Services. Where early Bitcoin nodes weren't doing that either. At some point when Bitcoin became a light wallet, it became a lot easier to just spin up a lot of nodes on, and that's totally great. But we want to, John's really interested in putting out this experiment and seeing if he can get to like millions of people.
100 million.
Hundreds of
100
millions.
million. There are 700 million laptops or something like that in the world. I would love to get all of them, but certainly 100 million.
Vlad, are you familiar with Koi, Koii, the Koi network? They have a couple 100,000 already individual people. So there, we have to beat them. When we beat them, we're going to be number one. I don't know any other.
Well, BitTorrent
centralized
guys,
node. Yeah.
BitTorrent had, I want to say, don't quote me, I need to AI search it, but I want to say they had 150 million nodes. I think so. And the reason I come up with that number is that I had put together a group of investors from the old Ask Jeeves team right when they were selling it to Barry Diller. And we went and met with Motion Picture Association, Recording Industry Association, and we had deals to buy up about 80% of all the BitTorrent traffic in the world. And we had deals with these individuals around, invisible people around the world we've met, or I conversed with and made deals with. It was we were seeing 150 million downloads of software per month to 500 million, and those were downloads of movies and TV shows and music. So when you look at the numbers to do that kind of volume, I mean, I think there could be 100 to 150 million, but I'd like to know that number. Until we beat that number, we're not the largest decentralized network in the world, but I think we can. How many nodes does Ethereum have? I think it's 300,000. I've heard Solana's 450. So for us to be number one in finance, I really think we need to hit 500,000 to 1 million nodes, but the goal is 100 million, or we're not going to be worth the size, the value of Bitcoin, in my opinion.
I appreciate your comparisons with other peer-to-peer networks, but I just want to be a bit cynical at this point and tell you that it's been 16 years since Bitcoin launched and about 15 since the first altcoin launched, which was Namecoin. And there's a lot of technology out there. There are some coins that have privacy. There are some coins that have smart contracts and programmability. Right now, in the way that it's being presented, Digital Gold doesn't have privacy, doesn't have smart contracts. It's only Bitcoin Core with proof of stake that it took from a proof of stake project that's called Blackcoin. So why do you think this one is going to be the one?
Distribution and valuation, and how it plugs into networks like exchanges and wallets, so that it has a constant value based off an Explorer. I mean, there's just so many innovative things about this that you're skipping over. But why did we use Bitcoin? Because it works. It's awesome. It's great. Why did we use Blackcoin proof of stake? Because they were the first to publish ever in 2014, February. And Pure Chemist, of course, was the one that came up with the concept and Purecoin, but they never hyped it or pumped it, and that's why their coin's worth so little. Frankly, they just didn't try hard to make it a big thing, but they made something beautiful. It's fast, it's scalable. You know, when Elon Musk talked about what kind of a coin Doge should try and be, he talked about it converting to proof of stake. He talked about adjustable block sizes, larger block sizes. He talked about no layer twos. He talked about how you might be surprised how far you can go with layer one technologies. And so this coin was really built around Elon Musk's concept of what would be a good coin if it was going to be transmittable, you know, for almost no cost money. And so I think it is simple, because simple is always the best approach. It is hard tested because it's Bitcoin at its base, and it's 2014 proof of stake that's been upgraded to the latest Bitcoin with SegWit. So I'm very, very happy with the coin that we've chosen. And I know specifically why we did, for the reasons I've said and are in the white paper. And I think the distribution model, valuation model, and how it stays pegged so that it's a flat price, not bid ask for price discovery, is all unique. And again, Vlad, this could all fail, but you can't say that all those things aren't unique. Can't say that.
Right. You mentioned wallets and exchanges. Can you name a few of them?
No, not today, but we're working with some, and we're trying to get on-ramp, off-ramp to every major currency in the world. And so small exchanges are fine. But there won't be any volume at them anyway for quite a while because there's no coins.
Yeah.
For you to earn coins, you get 2 coins per level if you're lucky enough to get in the first level, and then it goes down to about 1 coin, and then half coin, and then fraction of a coin the more people come in. So
It's not designed to be put on exchanges and have a price go up. I know it seems weird to that, like it's kind of opposite of what everyone else has been doing. But again, the idea is to approach this from like an experiment, and the quantifiable success is how many human nodes on the network.
That's right. And again, I would say also, our bounce rate off the website is almost nothing. Like, people hit the website and they're staying there. It's not salesy, it's not gimmicky, it's not marketing. It's inviting people to come in and be in an experiment, all on the same team, playing a game, trying to get there. And you don't have to contribute anything except a note if you don't want. We're not telling you give us money, but we do ask you to validate if you want to contribute to do that, because I could say that these glasses are worth $1 or $100, but they're not worth a penny unless somebody actually gives it to me. And so knowing this, and the more people that validate a price, the more you have to say, yep, that's the price that the community has consensus on. Then you move to the next level. And so that all of this is happening. We're seeing people come in, we're seeing them sign up. And that was before we even talked about putting it in a Bitcoin reserve. We're going to try and figure out how to spend this money promoting. So I think that proof's in the pudding. We're getting the downloads. We're getting amazing feedback on the street from anyone from an Uber driver that wants to be involved to a crypto OG joining and helping out and telling their friends. I don't expect anything to succeed. 85% of every well-funded company in Silicon Valley fails, but we're going to try. We're going to give it our best, and with completely sincere effort.
Well, there's a little bit to unpack there, because you mentioned reserves, you mentioned not selling anything to people, and all it takes is a node. But last week, with your help, Mr. Jedi, I was able to purchase some DGD from the website, and I actually sent out USDT. I had about 15 of it, $15, and I needed 20. You sent me another 25, so I went to level whatever this is. I'm not sure how this is structured. So
you can purchase
181, and I purchased a bunch of DGD. And what was puzzling to me is that I received it to my wallet in very small chunks, like 1.85 coins per block or something like that. Almost like, why is it not possible to withdraw everything instantly?
That's a great question. So if you look at the website, digitalgold.com, and scroll to the bottom, it'll answer that for anyone that's listening. We start when there are 10,000 people, 10,000 nodes plugged into this network. And the reason we do that is because We want to make sure that the 19,900 coins that go out every level for 1,000 levels, totaling 19,900,000 of the total 21 million coins, they go out equally. Now, this is the key to the fair distribution. The early people in are taking the biggest risk of their time at that point, really, and maybe some contributions. And so they get the most coins because there's 10,000 of them, and there's 19,900 coins. That first level, they got 1.99 coins, but that's all they can get. That's all they can get. Well, what if half the people didn't contribute? They just contributed their time and their nodes, no money. That's doesn't matter. The others stay in the treasury then for rewards later. But when there's 100,000 people, you're getting 0.199. When there's 1 million people, you're getting 0.0199. So why, if it's so hard to get them, and you're getting them as we hit each level, you're getting your 2 coins, a little less than 2 coins, a little less, and the price is going up as you're getting less, the value of them. Why would you go sell those? They're worth like a nickel. I think now they're worth a dime or a little less. If you really believe in this project that you've spent your time, which is the most valuable thing we have, or maybe some contribution. I mean, why would you dump it at a dime when, if you really believe it, it's going to go to $100,000? So as far as getting on exchanges, that's really just to prove the concept that they will, in fact, plug into an explorer and set a value that's not floating for price discovery. And it is what the last level was. Fantastic. That's what that's about. That's all it's about. But as far as there being volume on exchanges and having to market make it, you know how much trading in crypto, and probably Bitcoin too, but crypto in general, meme coins and all that, is just fake. It's just wash trading. Most of the exchanges want you to have a market maker, and they want you to just do a lot of back and forth trading at zero cost to build up volume for the exchange so they can get the next sucker to come in and pay that they're thinking there's real volume. Ours isn't any of that. The main reason that we want it on the exchanges globally is so that merchants have an off-ramp when they take it as money, and they still need to pay overhead or supply chain, and they need to turn it back into their local currency. That's who I really see taking it and selling it. But no one's even going to spend it right away, because why would you? The cup of coffee that's 10 cents now is going to be $10 tomorrow. It doesn't make any sense.
Right, but you mentioned something interesting, because you said today it's worth like a nickel. And you also projected an expectation that one day it might be $100,000, but at the same time, it's described as a stablecoin. So how does this make sense?
Because you have to first build a value of the network. It's worth nothing. If you look at level 1 on that sheet, you'll see the market cap's $1,100. You see these meme coins that coming out, they're worth $50 million, or $500 million. Sure, whatever. So as we're putting these coins out each level, that's the number of coins in circulation, and that's the price. So we start at $1,100 market cap. That's it. And as we go up each level, and 20,000 more coins are put out in circulation approximately every level, that we have increased the network size and the value until we reach parity with Bitcoin, and then we stop. Then it's not going up based on number of nodes. Now it's based on usefulness, and now it's based on keeping price with inflation, and then it's very stable. It only changes once every month.
I still find it hard to compute, because on one hand you want it to be stable, and on the other hand you want it to pump hard.
The idea it's
No,
not
I don't want it
that
to
it's
pump hard.
it's stable down the road. We outline exactly what the price and value will be if we get to a certain amount of nodes on the network.
Period.
And the stability is not it's that it's a stable price. It's the stability in the point that the value of the coin is predetermined, and anyone can see what it'll be when we hit a certain number.
Infrastructure. Based on that,
value,
yeah, the node network and the people using it.
Right, so if a certain number of people download the software and they use it, then the price is going to increase? Is that how it works?
Yeah, the same with Bitcoin. The reason it's worth more is because more and more people plugged in ever more powerful computers and wanted it more and more, and drove the price higher and demand higher to earn the coins. So then they have to sell them for higher prices. We don't have proof of work, but we can certainly look at how much infrastructure had to be built for them to attain those price points.
But
And
the
so all
price
we've
of
done
Bitcoin is not correlated to hash rate. It's It depends on supply and demand on exchanges. What we see as the price is just an aggregation of what's going on various exchanges.
It's a potentially free market, and the value of Bitcoin grows when your friends start talking about it and buying it. The more people buy it and hold it, the more the network grows and the more the price goes up. It's directly correlated. That's how it's been from day one. Price of Bitcoin goes. That's why Michael Saylor. It's why people go out and tell their friends and go out and grow the network. They're not developers coming onto Bitcoin. They're not building things. Let's be real.
No, but the conversation was about mining. That mining is the factor that provides price appreciation to Bitcoin.
No. Read through the white paper. I make it very clear that there's a lot of factors that go into the value of Bitcoin. A lot of people say that it's the energy costs, that miners aren't going to sell for less than what it costs them to create. But, I say, why does the dollar have value? It has 37 trillion in debt. It shouldn't have any value. It should have negative value, right? But it has value because you can move it all around the world with the infrastructure that's in place. And that infrastructure, although archaic, people are paying to service that and update the hardware and keep the software and the security and all the rest. And the banks and all ATM machines and all the infrastructure that goes in there makes the dollar worth something. Well, same with Bitcoin, I argue, and I could be wrong, by the way.
I think mining follows price. Right? Is that what you're going to say, John?
Yeah, that's right.
Right now, you can go on your website on digitalgold.com and buy up to 3,821 in coins using USDT, so almost $4,000. And how long will it take for people to receive this amount of coins? They have to basically wait for nodes to get deployed on the network so that the coins get unlocked and sent to their wallet. And also, they type in one address. So there's going to be a lot of address reuse, and blockchain analysis is going to easily figure out who that may be.
No, we've actually made that pretty clever, how that happens in the background. It actually is going to multiple different addresses, and we use it as a way of keeping the people private when they're sending it to us, because how in fact could we ever know who to give a balance to in their account to get digital gold each level if we don't know who they are? But we don't want their email, we don't want their phone number and text, we don't want to know who they are, but somehow we have to know who to credit. And so we do that by adding 5 digits onto the amount that they're going to send, and then randomize it across many receiving addresses. And when we see that amount come in with those 5 random numbers to a specific wallet address, we know it's them and we can credit their account. And so that's why we have copy paste set up so that people don't get those numbers wrong.
Oh, interesting.
So we just need to keep you private. We don't want to know who you are. We want it to be so much more like Bitcoin, but when we're handing out the coins for work participation, that's how we did it. By the way, too, to answer your question, this is not just about participating and plugging in a node and then hoping that you hit the next level. The idea of this is to turn people into evangelists who love the idea of private money that holds buying power, and they want to tell all their friends and family. They want to get everyone involved, even if they've never been in crypto. We want to extend that last mile to the normies that have never touched crypto. Because think about this, the idea of downloading a wallet, the very first time you ever did it, if you did it, and downloaded a Bitcoin wallet and someone sent you a Bitcoin, it was fantastic. Mine was on a holiday weekend when the banks were closed, right? And I was just like, oh my God, did you really just send me money? And it just, oh my God. And I was so blown away. That is the feeling people get when we get them to get a DGD wallet and we send them their first DGD. And they get that and they're just blown away. And they want to tell their friends because it's the coolest thing they've ever seen. And that's participation. The proof participation that Charlie talks about, we're all together in this together. It's not just plugging in your computer. Plug in every computer in your house and then tell all your friends to plug in computers, because if we can reach this, if we can do this, we've got smart currency, we've got the best money ever invented, and it holds your buying power. So participation is not just, hey, let's get this coin and make it moon and we'll get Lambo. Fuck that.
And Vlad, you were I think you were I think Vlad's worried about the fact that the transactions are happening in blocks, and that's because we're trying to prevent people from becoming whales. So you can only get a certain amount of coins at every level. So you can deposit a bunch of USDT, like you say, but you're only getting a couple at a time, just like everyone else. Everyone can only get the same amount
Yes.
every block, and that's because as the wallets grow and the amount of people, we don't want it to have like automatic. You just want to have a better distribution.
No, I was actually worried about address reuse, which is a known
Oh,
privacy
okay.
issue. Because you paste your
Address
address
Yeah,
reuse
and by
and
the
the
way,
we can
90,
coins are
we
going to
can
get sent to that address.
Yeah, we can add in some technological. We can add in we should work on that and implement maybe like BCH BC1 addresses like BECH 32 or whatever, and we can implement better address reusability. We should work on that for sure. And I want to point out that you mentioned Blackcoin and you kind of glossed over it. Have you looked into the history of Blackcoin? It's one of the first projects, and the developers are still around. It was one of the first projects to exist in the Bitcoin space in like 2012 as a social experiment. So it's not like this is a new technology.
Yeah, I think it was mentioned in the Ethereum white paper as inspiration for
There you
transitioning
go.
to proof of stake. But I gotta ask you, right now you have 14,000 active member nodes at level 34, and I guess you're gonna have to explain how the level system works much more clearly. But it also
Yes.
says that the price is 9 cents price per coin. And my question is, if the coin is not listed on any exchanges and there is no trading going on, how can it have a price?
because people paid it. They contributed money and agreed that at these levels they would pay an ever higher price and that we could take it out of their contribution. And so that was price validation by the community. And again, if the community doesn't believe in this and doesn't believe the price, then they wouldn't have put up their money. But they're validating. That's what's going on. And so rather than, and an exchange is where something is validated for price. Right now, if the last price on Bitcoin was 91,000 or 111,000, it's what? Because someone paid it. And in this case, people are paying it. They're putting it up. I said that earlier. I could say that this is worth 10 cents. It's not worth anything until someone pays for it.
Yeah, I agree with
And
that.
the more people contribute and the more people pay for it, each level, and then receive it, the more it is, yep, that's the price. I can't wait till 100 million people validate that last level at $100,000, because then that's the price.
So is this price determined by the people who bought some DGD coins using USDT or USDC?
Yes, and it's done as soon as they enter. The first page of the website tells them this is how it's paid out per level. And it talks about in the white paper, and it says it again on the website. If it goes up this many nodes, it goes up this much. And if they agree to that, then they fill out the form and they say, yep, and they contribute, and they see how many levels they're going to get to with, and how many coins they're going to end up with. And they can go look at that and verify that on that front page and flip through the spreadsheet. And if they agree to that, they put up the money. And if they don't agree to it, don't put up money. Pretty simple. So it's a community experiment.
Right, so where can people sell it? Because they can buy it from your website, but is there any way that
They
they
could
can
sell it
sell
to
it?
they could sell it to each other right now. If you could find anyone that wants to sell their 10 coins or 20 coins or whatever they have, if you could find a buyer, or a seller rather, then you could probably buy them from them. If somebody wants to put together a community site where people can buy and sell from each other, go for it. I'm not going to create an
That's a good
exchange.
point.
But when there is an exchange plugged in, most likely you won't see any volume. That's the biggest hurdle that I've had basically signing up these exchanges is that they want me to put $20,000 or $50,000 into an account to market make and do a certain amount of trading volume per day, so it looks like their exchange is doing more. And I'm like, no, you don't understand, guys. This is no pump and dump. You're not going to get any volume at first. It could be
There's no
6
pump.
months. There's no pump. It could be 6 months or a year where the coin is going up in value and there's no volume whatsoever at your exchange. But at some point, there's going to be a tipping point, whether it's $1,000, 10,000. I don't know what it'll be for people, where someone's like, you know what, fuck it, I'm going to sell some of my coins, and there will be the first sales on those exchanges, and there will be buyers because you can't get any coins.
Have you considered any of these decentralized exchanges like BISC or
Sure.
some of the more
And I
centralized
believe
but
that there will be an
peer-to-peer ones like
incredible
SideShift or
Vlad,
But it's important that the community, and it kind of happens naturally, I feel like.
I think that there's going to be arbitrage plays. I think people are going to bid so much money on pancake swaps, sushi swap types, decentralized exchanges. They're going to end up saying, okay, I'll sell mine, but I want $500. And you're looking at it and you're like, but the price is $1 right now. And they're like, but this is how much I want. And someone might pay it because it's going to 100 grand, right? And so I think decentralized exchanges will stay ahead of the curve. And if we're failing to reach our number of nodes, I'm sure they'll price them down here, undervalue us, and then the whole thing could crumble as an experiment. We'll see.
one of the show sponsors is SideShift, and they have this really nice liquidity and pair trading. So for example, if you go on their website, you can swap BTC for USDT. Well, not that it's a good idea. You should probably do the opposite, because it's a bull market. You should not hold on to stable coins, but you can do that if you want, and they have pretty low fees. You should consider listing it there at some point, and they're also sponsors of the show. So to everyone listening, check them out for whatever you may want to swap. And I was going to ask you
Did you give me their name again?
SideShift.
SideShift?
Yeah, it's like the spiritual continuation of Shapeshift.
Is it siteshift.com?
No, .ai.
Thank you. Cool. I'll look into that.
They have a lot of
Awesome.
pairs, and you can switch. You can swap between currencies with low fees. That's how it
I
works.
love it. I've got it. I will look into it. Very cool.
So I want to ask you about the Treasury, because you have a system where when people buy coins from you, you're buying Bitcoin and you're building a treasury out of that. But do the people who buy the coins own any chunk of that Bitcoin, or is there any way to redeem DGD for BTC?
No, it's similar to the idea that Fort Knox had gold in it. Maybe it had silver at some point, and it was a reserve currency. It was the reserve commodity that stood behind the currency. And so the same idea here holds with Bitcoin. And in fact, one of the biggest concerns I have right now is that if we sold out all levels, it's non-trivial. It's $142 billion. And I question whether we'd ever sell that out. But now that there's a Bitcoin reserve and seeing Saylor sell at 42 billion in 3 weeks, I think we will sell it all out. And so then the question is, how do we keep that safe for the community? Multi-sig wallets go so far, but like generationally, where do we put that? Because we're against institutions, right? We don't want the government touching it. We don't want banks touching it. We don't want corporations touching it. So it's the communities, Vlad. Now, if you threw away the keys, then you might as well not have it, because you can't access it, then you don't own it anymore. So what do you do with it to keep it available so that it really is a liquid asset behind this currency? But at the same time, it's completely safe from ever being touched. And I haven't answered that question in this experiment yet, but we're going to have to solve that. That's my biggest concern that keeps me up at night.
Yeah. Hardest part is getting.
I mean, could we bring a Michael Saylor in? Could we bring a Max Kaiser in? Does that make people feel safe enough? I don't know if it would make them feel safe enough. And then are we leaning towards Wall Street with MicroStrategies, you know?
We have to just constantly rely on getting people excited about it. It's not, unfortunately, all the other projects that we know and love are people get excited because there's going to be a coin that's going to list on an exchange that they could sell. But here it's like almost a very long-term thing. With Bitcoin doing well, it's easy to inspire people because they're doing something, they're involved in this, and it really has been a freaking tedious, like person by person, like starting this thing is like, you know, look at our growth and how we did our marketing. It's just been organic through our social media. But if we can prove it out, many historical papers will be written about it in a positive way.
I'd agree with that.
Just like as they are with Bitcoin. And Bitcoin
Bitcoin
proves
took
that you can do this.
Charlie, Bitcoin took 15 years. And as Vlad said, it took 15 years. Now, does that mean that our cycles should take 15 years from start to stalwarts? I don't think so. I think it can be accelerated because now there's knowledge of crypto, there's knowledge of Bitcoin. And with knowledge of Bitcoin, forget crypto, knowledge of Bitcoin and people's desire to have it now, and us having a Bitcoin that's really set for commerce, I don't think the adoption cycle will be 15 years, but it could be 5, it could be 3. I don't know. I don't know what it'll be, Vlad. But we don't get there in price until we get there in power.
And don't forget, Vlad, what created the original Bitcoin price was the fact that we were on the Bitcoin forums selling products, socks and pocket knives and digital cameras, and kind of just making up our random prices for what we think. Like, send me 50 Bitcoin. Look at my early posts. It was like, send me 20 Bitcoin for this, or like you just kind of made it up. There wasn't a price that you'd reflect on an exchange somewhere, but kind of over time, it reflected into a price, and prices for Bitcoin were very different everywhere all the time. We're just trying to re-emulate that whole process and more fine-tune it.
Self-custody. It's gonna be really foreign.
Yeah.
Everyone outside crypto, and even a lot of people in crypto, but not to Bitcoiners. Bitcoiners know, they'll look at that wallet and immediately be like, that's the Bitcoin wallet.
Right, so you're gonna be holding Bitcoin in your treasury. And the question is, does the price of DGD, which is digital gold, the crypto, gonna be pegged to the value of the Bitcoin in the treasury?
Not at all. And it talks about that in the white paper, that it's very possible with us doubling this every 6 years, it's possible that Bitcoin will go from 100,000 to 1 million or more in the next 4 years with pro Bitcoin administration. I think it will. I don't think that if we hit this in 3 years, we may have more than them. But over time, if it goes 10 million, goes to 13 million, whatever Saylor said, it's very possible. But remember, there was a time when a 1964 or before quarter in your pocket had more silver in it than a quarter, but it was still a quarter, and it still bought you 25 cents worth of goods. It'll be the same with us. There's a possibility that the Bitcoin in the Treasury might be worth more than the value of our infrastructure. It might be 2 trillion. Well, we might have $2.5 trillion worth of Bitcoin in our treasury. Does that mean we're now worth 2.5 trillion? To your question, no, absolutely not. Just like silver coinage and gold coinage was worth more than its face value, ours could be at some point. Nothing wrong with it. Just means our currency is strong.
On your GitHub, there's this repository that's called Digital Gold, in the Digital Gold Foundation sub, whatever you call this. It's like a folder. And in the description, there are 2 interesting parts. First of all, there's a contributor who's called USDG coin. So I guess before you called it Digital Gold, you're thinking of calling it USD Gold.
El Paxos came out with US Dollar Global, and they're like $1 billion company, and they literally came out like a week before we were going to announce. And then we're like, oh my God, we have to change our name. Crap. But as a result, we ended up with DGD, which I think is better. And we ended up with Bitcoin. Our digital gold is just a name. Instead of Universal Script Digital Gold, it's just digital gold. So it was actually a blessing that Paxos stopped us dead in our tracks. But that's what that history is from.
In the README file, it says US digital gold is an asset backed by private digital currency. Coins in circulation will be backed in fiat currency and other conservative stable assets. Does this still apply?
There was a version of this almost 3 years ago now, where
this will continue to evolve too.
Yeah, exactly.
Continue to evolve.
And it is now. I mean, we changed the white paper from looking at a basket to that now, right?
And it says the not fiat treasury, so it implies that you're gonna hold anything but fiat in the treasury, is independently audited on a quarterly basis to ensure full transparency and accountability. The question is, who's gonna audit this?
Sorry, can you repeat that?
The question is, who's going to be auditing
the treasury? It says it's
Right.
going to
So,
be audited on a
when
quarterly basis.
it's definitely going to be audited, and it first of all, understand everything's on the blockchain, so anybody can track anything at any time for the most part. But as far as the reserve goes, that will absolutely be there for everyone to audit. I don't know if there is a top audit company in each of the countries that we will be in, but it would be an amazing, wonderful thing. I have always been disappointed that Heather doesn't do an audit. I'm disappointed that U.S. Dollar Coin doesn't put out an audit to prove they've got those funds. I'm disappointed that we can't audit the Federal Reserve, and that it's not really federal as Federal Express is federal. I want this to be a different coin. I want everyone to always know what happened to the money that came in the door. Where is it now? Where was it intended to go? Did it go there? What's in the reserve? Has anything moved out ever of that? And I want people to keep a laser eye on that. Nothing like that exists today in crypto. That's what I'm hoping for. How we put that together is something that will be done, because obviously it can be done. Who will be those people that are credible? I don't know. The big four or whatever it was, big three, whatever, that lied about the numbers during the subprime mortgage meltdown. So who do you trust? But I would love
The
it.
blockchain.
But
I trust the blockchain.
Right. So, but to answer that question, Vlad, I can't answer that question yet. But we're looking at it, and that is something we're committed to.
I gotta
And
run.
if it's quarterly, then at the end of the first quarter, we need to figure it out.
I gotta run, guys.
Charlie,
Really
thank
good
you
this
so much.
podcast.
Appreciate you, brother. We'll
Charlie,
catch up
Good
with you.
work on
just before you go,
everything.
what's your bullish prediction on digital gold? In your wildest dreams, what is this going to look like?
I would love to see us have in 2025 over 1 million nodes.
That'd be amazing.
Like, that would be amazing. With 1 million people that have downloaded the digital gold software, and we have some percentage of them being active user nodes. I want to come back on this podcast and we'll talk about what we could do with that now that we have that decentralized infrastructure. What can we do with that?
Amazing.
All right, I gotta run. I'll see you guys
Thank
later.
you very much, Charlie.
Thanks, Charlie.
Congratulations. Bye.
Catch you later, dude.
Okay, now that he's gone, I'm going to have to readjust the screen because he
Readjust
messed
that,
up
yeah.
my setup.
Yeah.
And in the meantime, I'm going to tell the listeners about the sponsors of the show. I've told you about SideShift, but we also have Citrea, and they joined like last week or something. And they are trying to build this layer 2 on Bitcoin, which is built via rollups. ZK rollups are this pretty avant-garde way of creating scaling layers. And you can check out citrea.xyz today. They are running their software on a test net, and they can also launch on the mainnet sometime soon. And their promise is that they're going to bring these financial services on Bitcoin. So whatever you see with DeFi on Ethereum, they're going to try to also enable that on Bitcoin. For example, you can lend or borrow stablecoins against your Bitcoin without any trusted third party. And you can do other cool stuff like basically Celsius or BlockFi on a protocol without a company, without anyone to rug you but yourself if you don't respect the terms of the contract. And it's pretty cool. Give it a try if you're running any sort of setup that enables you to try that software. Give it a try at citrea.xyz. There's also Layer 2 Labs, which is another alternative for scaling Bitcoin with sidechains. These are two-way pegged miner-dominated sidechains, which miners can enable. They rely on BIP300, which needs to be activated on Bitcoin. For now, we don't have that yet. But if you want to try the software, you go to layer2labs.com/download. You're going to find for Linux and Mac OS and Windows, a client that allows you to run a Zcash sidechain, an Ethereum sidechain, a Namecoin sidechain, a prediction market sidechain, and a lot of exciting stuff that they put in there. Basically, it's not just an idea, as it has been for years. It's also an implementation that you can try today. So if you believe Bitcoin is going to scale with layers and you want to drain altcoins of their use cases, this can be one of the technical implementations that's going to enable that. So look into Layer 2 Labs. And Paul is a big sponsor and a big fan of the show. And he's also a big fan of Charlie Shrem. I think he bought some of his coins on BitInstant back in the day, so I actually told him about Charlie joining the show again, and he was excited. And
awesome.
there's also No One's, which is trying to build a digital economy for the global south. They are relying on the world's oldest form of currency, which is vouchers and these, what do you call them? Gift cards. That's the word I was searching for. Gift cards. You can trade gift cards with African people, with Asian people who are trying to lift themselves out of poverty. And if you want to participate in this revolutionary movement, which is helping them join the global economy with your cryptocurrencies, and I think they support Bitcoin, Ethereum, Litecoin, and a bunch of others, you can do that on noones.com. Check that out. It's a peer-to-peer marketplace. They let anyone sell anything, but mostly it's gift cards because that's what is most liquid in these markets and what is easiest to transfer. Last but not least, there is hodling.ch, and they are a company from Switzerland that's helping you with self-custody. So if you have a lot of Bitcoin or you want to start buying Bitcoin and you don't know how you should secure it, then they're gonna tell you exactly what you should be doing in terms of hardware wallets, multi-sig setups, and whatever it is that you need for your particular use case. Because every user is different, lives in a different area, has a different threat model, and is exposed to different risks. For example, if you're from Los Angeles, you should most likely back up your seed on metal and something that does not burn. Anyway, hodling.ch is based in Switzerland, and they can help you with very good consulting and privacy. You know, that Swiss privacy between service providers and clients. So check out hodling.ch. And now, Mr. Jedi, it's just you and me, and it's just you and the Sith Lord.
Really,
I'm Kylo Ren.
I don't think you're an evil guy.
No, but I need to create some contrast, right? You have that green background, the green lightsaber that Luke Skywalker used in Return of the Jedi.
You've got purple. Look at
I've
that.
got purple, yeah.
Yeah. I like it.
Is there anything that we haven't covered about digital gold and that you would like to say at this point?
You know, I just want to be real. I mean, he said 1 million people in a year. That would be amazing. Like, I'd like to get to 100 million people in a year, frankly. But all experiments, they either win or they don't. And if they don't, they're in a much bigger pile than those that make it. This is a fact. Most startups fail. Not that this is a startup, it's not a company, but it's an experiment. And most experiments fail. Most do. But sometimes you get lucky. And sometimes you get lightning in a bottle, and sometimes something works. And looking at what Musk thought would work and finding the team, Blackcoin, that could deliver that, and then bringing that to reality against so many challenges. You know, there's a team of about 30 people that are involved in this all around the globe. And you know, I think we've got a shot. I really do. And if people like the idea, then they're going to join and it's going to grow. And if they don't, then it won't. But the growth's been incredible. And the response that I've gotten is not just from crypto people, but from, you know, people that have never, ever touched crypto. And again, most crypto people have never touched a wallet and experienced self-custody. They've gone on Coinbase or whatever. I'm talking majority being like the 45 million people in the US that trade, or the 450 million globally. So there's a lot of reasons for it to fail simply because it's a new thing and they don't understand it. I think that would be the biggest reason it would fail. But that's what I would just tell people. I mean, go at this. If you decide to join the game, go at it with the idea that it's a game and we could all lose together. It's possible. I don't want to come out and be like cheerleader for digital gold and it's going to moon and we're all going to get rich and because that's not what it's about. It's a social experiment to see if a community globally can come together and create perfect money that preserves buying power over time. So that when you work hard today and you put that money in the bank and you could buy groceries, that in 10 or 20 or 30 or 40 or 50 years, you can go to your savings and still go buy those groceries. What a crazy concept, you know?
What I find interesting, and I'm looking at the blockchain explorer right now, there's 19 million coins in the treasury, and there's 4.8.
19.9 million coins in the treasury, right?
It's
Well, whatever's come out,
19.133.
I don't know how. You're right. I don't know how many's come out in the last level. I shouldn't say that, but it started with 19.9 million.
There are the next addresses that are staking. There's 4,800,000 in one, 4,600,000 in the other one, 4 million in number 5, 3.36 million in number 2, and 3.26 million in number 1. The question is, why does this add up to more than 21 million coins?
I'm going to go look right now at the rich list because I know it doesn't. So let me just go look at the rich list on the Explorer.
Is it that
Definitely.
the same coins in the treasury are being staked?
Well, yeah. Does it have it separated? That's your answer. The reason that we're staking all coins, first of all, any staking rewards are going to go to those wallets and they're going to get burned. So no one's going to get chosen for that anyway, likely. But also, and most importantly, 51% attack. So we have to make sure that until this is well distributed, the first 10.5 million coins are well distributed of the 21 million. And we know they are because we know it's being widely distributed. Even mining pools will only get so many of that 10.5 million, not even close. Then at that point, when the Treasury controlled staking wallets now have less than 51%, it's pretty safe to consider that no one has collected 50% and now is going to grab the final 1%. I think it's going to keep us safe. Of course, BlackRock could come in or someone could come in and on exchanges, just people could sell right up through level 1,000 from 700 or whatever, and they'd have it. But I don't think that's going to happen. I hope not. Didn't happen with Bitcoin. 93% of Bitcoin's owned by 1.8% of the people. So perhaps someone does own 51% or a consortium of them.
Well, the DGD treasury also owns 19 million out of 21, so it's still centralized up until you get enough users, I guess.
That's right. Absolutely. It has to be. And then who do you trust? Well, Charlie Shrem is a trustworthy guy, and he's been around, and Blackcoin, they've been around, and no one's ever burned anybody. But again, if somebody doesn't trust, that's no problem. I would say don't play the game, and that's fair. Crypto, never trust anybody.
Right, so you have 5 staking nodes. And what's interesting to me is that there is no incentive to run your own node. I've been running mine for a few days now. I think we had a conversation on Friday, and I installed the node for the first time. There is no reward for staying online. And since you have a proof of stake system, why didn't you design something so that the nodes receive some coins for staying online? Because otherwise they're just gonna collect their handout and shut off.
Well, we'll see. I mean, I think that in the spirit of the game, people are plugging in and getting more people to plug in and staying online so the numbers grow, so that the value of the coins that they have grow, right?
Okay, so that's the only belief that if you keep your node online...
If you're just there to grab some free coins because you referred a friend and you're going to get something if they validated some coins, then you could be there for that reason, and that's fine. And for that point, maybe you don't really care about the network or growing it or expanding the value of the coins in your wallet, and so you unplug. That's okay. There'll be people like that.
For me, it's a very interesting experiment because you're basically assuming that everyone's gonna run their own node, believing that this is gonna bring up the value of the network.
That's literally what it says on the front page.
For longer than a decade, people have been complaining that running Bitcoin Core is difficult and takes too long, and it runs on a laptop or a desktop computer, and it's not portable enough. And basically, you have Bitcoin Core with functions from Blackcoin. So it's, from a user experience point of view, it's not the nicest one that there can be. So you believe that they're gonna run nodes on their laptops, when for 15 years or 16 years already, Bitcoiners haven't really run nodes and they just relied on SPV.
Well, of course not. Why would you? You can't compete with supercomputers. I mean, you just answered your own question. Why would you? You're not getting any Bitcoin. You're not going to. You're up against 15,000 or 14,000 or whatever the number supercomputers that are competing to get those Bitcoin. If now it happens, I think you're the one that taught me that once in a while, someone taught me recently, you'll just by chance get to book a transaction and win the Bitcoin reward, but not likely. In this case, two things. We don't have rewards, okay? Two reasons. Number one is just what I said. If you are a part of this community, your duty is to participate. This is called proof of participation, not proof of work, not proof of stake, participation. That means that you're committing yourself to increasing the value of this by participating. And that means telling your friends, getting more nodes signed up, finding merchants to take this locally so you can spend it locally when that time comes, because that'll be another part of participation. But participating means plugging in your computer. And if you don't want to do that, this is probably not, the community for you, unless you're just riding on everybody else's hardware. But people will do that. People will. Oh, by the way, the staking rewards, a couple of reasons. I don't want to generate new coins and go beyond 21 million. And so they're burned. They go to a burn wallet. We don't want the inflation. Also, although after the Chevron case, got overturned in the Supreme Court, then the SEC dropped all of its cases against these proof of stake and others who they were saying we're paying a dividend, they thought maybe. And so we didn't want to get caught in that. And the reason that we burn transactions, the 0.00001, so if I send you a penny, you get 0.99999. We like that, typically within 10 seconds or less. And you asked the other day how often. It's one block every 1 minute 4 seconds, every 64 seconds. Okay, and so we don't want there to be any inflation on that, so we burn that. But we also burn the transaction of 0.00001 because I also saw the SEC grumbling that maybe these wallets that were transacting, collecting fees, were actually money transmitters, and that there being money transmitter license requirements or some nonsense. So we burn those transactions, so you can't say anybody's a money transmitter earning fees. Now, it'll have a negligible effect on total number of Bitcoin if we reach their transaction volume and value, which is our goal. If we do that, we'd probably lose about 3,100 of ours if they were valued at 100 grand or more. And so if we lose that, well, shoot, people are going to be putting coins away in savings and locking them up. People are going to lose access to their coins. People are going to die and their coins are going to be lost. I think 14 or 15% of all Bitcoin are lost. So those are the things to do with just keeping it at 21 million and maybe just slightly less over time.
It's still a bit confusing to me because you acknowledge that people don't run nodes because they don't make any coins in Bitcoin. But then you say that there's also no coins to be earned in DGD, Digital Gold, for running your own node.
Again, Bitcoin operates completely differently on price discovery. So for price discovery in this, if you agree to participate, because it's participation, then you're agreeing that we're going to move from a valuation of $1,100 when there are 10,000 nodes plugged in. We have a value of $1,100, and that if we move up 1% in number of nodes compounded, then that value moves up. And we don't move up if people download it once, unplug it, turn it off. Okay, but I mean, you're not going to help yourself, because rather than getting staking rewards, your coin was just going to go up in value by you participating and plugging in and getting others to plug in, because that's what it's about. Again, it's about having a computer network of 100 million computers, laptops and desktops that are participating. But if you don't want to participate, then you turn it off, I guess, and hope that everybody else carries you across the finish line.
On your website, there is this Get DGD button. and there's a participation form where you can check a box if you don't want to purchase the coin. So you can purchase the coins from what I presume to be the Digital Gold Foundation using USDT or USDC, and you can buy from $20 up to 4,000 or something. But you're not going to receive them all at once. You have to wait for the network to level up, so basically for more nodes to get deployed on the network. And you have this option to receive coins without participation, and you type your address, you sign up with your username.
But I just need to correct you. It's not buying and we're not selling, okay? You're not purchasing. This isn't a company. This isn't an ICO. This is that if we don't have people validate a value at each level through contributions, not a purchase, it's a contribution. Because if this doesn't work out and we don't get to those further levels, well, then your money was put into a Bitcoin reserve and that's what's back in the coin now, but that's it. Pyramid can fall apart. It's a contribution. The little boxes at the bottom of that form that people have to check say that. So I just want to be clear that I'm not agreeing that people are coming in and buying coins, because that's not what's happening. They are allowed to get coins that are validated through their contribution as another way of participating. But at the top, you can check a box that says that you don't want to put up any money. You don't want to validate. You just want to refer friends, I guess. Or you're just magnanimous and you just want to download a node just for fun, in which case, why even fill out a form? But if you want to invite people with an invitation code or a link, then you can earn digital gold. If they purchase it, let's say they purchase enough to win 100 digital gold, or validate 100 digital gold, you will also get 10% as many digital gold. It's single level referral, like many bank cards and other things do. And that 10%, by the way, where does that come from? Well, those coins that will not be validated over those 1,000 levels, we expect will probably be 20 or 25% of all coins. So that 10% will come out of those coins that are not validated, that are still in the treasury each level.
Right. So if I send you 1,000 USDT,
so you don't have to put up any money to participate.
I get that, but if I do choose this to send you 1,000 USDT in exchange for DGD, isn't this buying? Because I'm giving you something in exchange for something else.
What you're doing is, well, because you might not get those coins, remember? If we don't hit those levels, you don't get a refund. Like, you contributed to an experiment to cover different levels, and if it doesn't go beyond level 34 where it is now, if it does not hit another level, but you've put up that money as a contribution, you don't get your contribution back. And you can't say, but I bought those coins. No, you didn't. No, you were going to be rewarded coins that were validated with a contribution at each level if you so chose. But you didn't purchase a block of coins that we now owe you. You got to read the boxes, what it's saying. It's a contribution for validation. And then that's going to be put into a Bitcoin strategic reserve to back the currency as well. So,
oh, you say back the currency, but you also said previously that there is no correlation between the treasury and the price of the coin.
No, I said that the coin has the intrinsic value as it meets, if it meets parity with Bitcoin. If it meets parity with Bitcoin, means it has 100 million computers plugged in. It's able to do the same number of transactions and the same dollar value. And there's that much excitement about it. And now we're moving on to that 1% per level. If it does all of that, right, then we've got that value, $2 trillion. Just like Bitcoin. Why does it have value? Because it has 100 million users and it's got all this power and can do, all these transactions, and it's private and all the things that it makes it great. It's scarce. Ours is equally scarce, even maybe a little more scarce because we burn the dividend or the transaction fees, rather. So the value that Bitcoin brings to it is, like, on top of all of that, the dollar has value because of all of the infrastructure and that. And it used to also have gold and then silver. And that gold and silver at some point was worth even more than the paper that it was printed or the coinage. Same thing could happen here. We're just saying that this stuff has to be validated. That only happens when a group of people come in and contribute and validate a level. And then what do we do with that? It makes perfect sense to create a Bitcoin strategic reserve as yet another way to back up the value of the currency over time. And that's all that is.
You're very careful in the language that you use, but it does say choose the cryptocurrency you want to pay with. So if there's a payment involved, isn't there also a purchase? Because it doesn't say
Well,
donate
if you
or
said you wanted to be a
contribute to an experiment.
but if you said you wanted to contribute to the New York City Ballet and asked how you wanted to pay, that doesn't make it not a contribution, right?
Yeah, but the right term, I guess, is donate or contribute, but it's not pay, since you're not expecting to necessarily receive something in return.
Sorry, this is a long podcast and I just had a lot of messages that I've got to answer. Say that again.
So if you say you pay with something, it means that there's a transaction going on. Can you agree with this?
If you're saying that there's a transaction, I would say yes, a contribution is definitely a transaction. A contribution is when you're transacting with some entity because you support them.
Right,
Without
but
expecting,
it doesn't say
without
donate
expecting,
or contribute.
without expecting that you're going to get the end result that you hope necessarily. You're just contributing and you're hoping this experiment works. That's it.
Okay, I'm just confused about the language on the page, that's all.
You have to be very careful about the language that you choose to make absolutely 100% sure that people understand very clearly that they're not investing in a company. That's reason why on the white paper, we describe the different types of coins, security coins, non-security tokens, means things like that, or actual blockchains that don't do ICOs. And so this is not an ICO. This is not any investment into a company or an organization expecting a profit. This is an experiment. And it is an experiment with a community that is trying to build money that keeps up with the cost of living. And that's it. And I'll stick to that all day long.
Is the white paper still on the website? Because I can't find it.
It was never on the, I don't think it was. It's going to be on the revision of the digitalgold.com page. Let me just check to see if my engineer, Alexander, who does that, I told him to update this as soon as he woke up. Tend to work really bizarre hours. And so, well, we all do. Okay, I do not see a response from him. And so I'm going to say that he has not updated and that it still has the old version. So I would just wait until later today. I mean, it covers a lot of it, but I think that my revisions to the last white paper, I think were frankly excellent. And so they're more concise. And I think it really truly describes what we're trying to do with this experiment.
Yeah, I found the old one, but it's not updated with what you mentioned.
Yeah, no. And that's at digitalgoldfoundation.org. No, that's not updated, but it will be. And I don't know, is this a live stream going out right now or is this a podcast for later?
No, it's a live stream.
Oh, right. Oh, very cool.
So I cannot overlay this later.
That's okay. Don't worry about it. It'll be, if anybody watches this and goes, it'll be the new one as soon as, it'll be the same address. So if somebody goes to digitalgoldfoundation.org later and clicks on it, it's right there. There's a white paper that describes it at a very high level, how the game would work and how we do merchant adoption and all of that is there. However, the white paper does not include anything about a Bitcoin strategic reserve. And so I just literally finished the white paper this morning at about 6 a.m. I got up and polished that. And then I'm going to have the white paper out probably tomorrow, Vlad. That's my guess.
I think the elephant in the room and a bunch of people listening to this show are fans of Bitcoin Cash. And that one also tries to serve pretty much the same purpose, to be a medium of exchange, to be a free market currency, to have dynamic block size. And I guess if they get to this point listening, they will ask themselves, why not just use BCH and invent a new blockchain?
Yeah, I mean, it says in the white paper that we expect there'll be other, what we're coining the term smart currency. We believe that what we've invented is a smart currency. It's a currency that can flow freely around the globe with very little transaction cost or latency. And we hope that other people try and put out similar currencies. They probably will. Bitcoin Cash, tell me about Bitcoin Cash. Is it proof of work, proof of stake? It's proof of work, right?
Proof of work, yeah.
Right. And is it pre-mined and they're distributing it fairly? Or is it whales can come in with big computers and scoop up all the coins? Or I don't know exactly how it's run. I don't follow Roger Ver and his projects. But I commend anybody that was trying to figure out how to turn Bitcoin into money. And then he did Satoshi Vision, I guess. And he was also, again, trying to realize the vision of Satoshi that Bitcoin becomes money. But when you're solving that Rubik's Cube, and I hope we did, we may not have, but when you're solving that Rubik's Cube, there are a lot of pieces that have to fall in place and land perfectly. And I do believe participation is a big part of it, but I think that it's really participation. It's plugging in the nodes. It's creating a network, something of real intrinsic value, something people are using. Self-custody and being good with self-custody, understanding the benefits of it. Still being able to jump on mobile wallets like BitPay or something later, certainly. But that's what you're going to go spend. What you keep on your wallet or in a hardware wallet or whatever. That's what we have to teach people, and I think that's the learning curve. So hopefully there'll be more benefits or there'll be enough pros to get people to take the leap of educating themselves on self-custody.
I've been telling people about this digital gold since discovering it last week, and I see that this is also in the old version of the white paper. It references the collapse of Terra Luna in May of 2022, and this is what someone else told me, that the way in which the Treasury and the whole system in which digital gold is constructed reminds them of Terra Luna. And my question is, how would you describe it being different?
Well, I mean, Terra Luna they had two coins, right? And one was relying on the value of the other coin, and they were both just pump and dump coins, in my opinion. There was nothing there. There was no fair distribution in either one of them. There was no money behind it. There was nothing behind it. Did they have nodes? Did they have wallets? No. So what were they based on? Algorithmic stablecoin, I believe that's what they called themselves. And so no, that's no. And especially with the Bitcoin Strategic Reserve, because then what you're saying is that they had a shitcoin that was backed by a shitcoin and would algorithmically move things around to manipulate price versus having something with 100 million laptops and desktops with that many people participating by getting merchants to sign up and everything else, and being backed by a reserve of Bitcoin. So no, I think I'd have to debate that person on that one. Maybe they'd win the argument, but I don't see it.
You talk about fair distribution a lot, but as of right now, and it's January the 13th, 2025, there are still 19 million in the treasury of DGD. And how can people claim some of these coins without buying them? Because you mentioned this.
How can they what?
How can they claim some of these coins without purchasing them?
They can refer friends that purchase them. I mean, there's got to be a coin that is earned through validation. And so if they're not going to contribute and validate themselves, they can contribute by finding a family member, a friend or colleague or someone in crypto that they think might like this, grab an invitation code. When you go to that form, if you click the top and say, I don't want to put up any money, but you downloaded a node, a wallet, and you grab a receive address and put it in there and create a username and password and check the boxes and hit go, you are a member. And right there, you have an account and you'll see there's a promo code, which is your username. And there is a promotion, an invitation link. And if you use those and someone comes in and buys 100 coins over so many levels, you get 10. You get 10% of whatever person you directly referred or went through your promotion link or linked directly If you referred them, then you could earn some that way. And that's great because, we want people to invite their friends. But heck, even if you invite friends that invite friends that invite friends, if you actually are in this just magnanimously like that, we love you. Maybe you just hope to have this, fantastic money to spend later, and have this experiment work. I don't know why people do anything. But if it's because you want a moon and you want to be a whale and you want to come in and buy up everything with your crypto dust, you can't. That's the beauty of this distribution model. You can only have your fair share every level. And of course, the bigger coins go to the earlier adopters, just like with Bitcoin, the reward was bigger per block. In fact, by the time that we hit 1 million people, we'll have given out 10.5 million coins, Vlad. Half to the first million. Okay. And then 5 million coins to the next 9 plus 1 million. And then the final 5 million coins to the final 90 plus 10 million. So that's fair. The early adopters that came in there and built it when there was nobody else, heck yeah, they deserve to get more reward. That totally makes sense. I think that's why Bitcoin was designed the way it was.
Right now, there are only 62,511 coins in wallets outside of the top 100, and that's out of 21 million. So you have a long, long way to go in terms of adoption.
We have a lot of coins to give away. We have 19 million coins to give away. And the 1.1 million coins that were kept back for the 30 founding team members, that I believe is very fair. And I think that's very fair. Satoshi got 1.1 million coins that he earned, and so did this team. And so this is divided amongst about 30 of us, and it comes out over time so that everybody can, we don't get them unless we go up through the levels as well. When you compare that to others where they keep 10%, 20% or more of the coins for the founding members, and I think this is a super fair distribution. People might not agree with that, and that's okay.
Right now you have 5 staking nodes, and they add up to about 12 plus 7, 19 million coins. So I guess all of the treasury is being staked right now. The question is, how does one become a staker? Can I, as a user, if I have a certain number of coins, start validating blocks?
You're not going to get any staking rewards, and so your wallet has staking turned off by default. But if you wanted to go into your wallet and turn on staking, you certainly could, but it's not going to earn you any rewards. There'll be no staking rewards sent to you. They'll be sent to a burn wallet rather.
Wait, so why can the core wallet stake, but the users cannot?
The point of this is not really at all about getting people to stake. That's really not what this is about. What this is really about is getting people to plug into the network and have a value for that. And you keep coming back to, well, there is no value for that. Because if there was I'm not getting staking rewards. And what I keep coming back to is, no, there is. Because by you participating and plugging in your computer and plugging in your node, you don't need to earn staking rewards. The value of the entire community's coin is going up by everyone participating that way.
If I decide to rent a farm of servers of 100 computers or 1,000, and I make them all validate DGD by downloading the client and running a full node, is there any way that you're going to know what I'm doing? Or are you going to report that you have 1,000 extra users?
If you don't have it, when you go to the Explorer and you see the number there of actual connections, that's what we're looking at.
So how do you define a connection? A node or an ISP or an IP address?
Is a unique IP address.
Right, so if I run them on Tor and each one of them connects to a different onion routing route, how are you going to know that?
I mean, if people want to come in and cheat, I guess they will. And if they're trying to run up the price, is what you're saying. How would we know if someone isn't just spinning up a whole bunch of IP addresses and nodes that are fake, I guess you're saying, to run up the value of the coin? I guess if someone wants to take that much energy, and perhaps in the beginning that would matter, but I think that as we get up towards 100 million, well, towards even 10 million or 50 million or more, you have to make such jumps in between each level as to new number of nodes that it seems that it would take all of somebody's time, all of their energy. If they want to do that, I guess they can do that. I don't have an answer for you.
Okay, but what happens when they shut off? Is the price also gonna go down?
No, it's sort of like grabbing a brass ring. You go up and you grab it, and if you sink back down, that's okay. But whatever was the last high, and it's not just any high, it has to hit a specific number that is almost 1% higher than the last number. So it has to at least burst to that and touch it before it's going to potentially fall back. It's definitely going to fall back, especially because right now on Mac computers, the Bitcoin wallet, it's very difficult to get it to auto start if the Mac gets turned off that it's on. If they don't manually go in there and turn the auto start on, or what I do on a Mac is grab it and move it to the other side of the taskbar to automatic open these. That's an easier way to do it. We lose them. If somebody turns off their computer, now if it sleeps and comes back on, that's different. But if they actually turn off their Apple, so we expect that nodes are going to come up and go down. It doesn't mean that person left. It just means that they didn't restart their digital gold wallet. So that's how we judge that.
Okay,
Right now,
but what if there is a major outage that takes a week or something? And maybe that there are only 10 nodes running the network. Is the price gonna remain stable?
You're saying that electricity went down globally? There was literally like
the internet. Maybe someone cuts the cables
there's
underneath
an
the Atlantic
EMP attack
Oceans or something.
No, I mean, this is decentralized computing, man. And it's all over the globe.
But it's
So-
about the price, not about the network being able to relay transactions, because you're
I
pegging
see
the
what you're
price
saying.
to.
Again, the price isn't going to change because a bunch of networks went off the internet, because they're all going to come back on. The internet, I will presume, is coming back. If it's not, we've got another problem, man. Much bigger than this one.
Okay. So you said that there is no way for me as a user to stake coins. But what does it mean that there are core staking nodes? What are they really doing?
We're just making absolutely sure that we can't get a 51% attack, and that we will keep staking and keep running those, and they will be the Treasury until the Treasury is 50% dispersed. And at that point, we're still keeping somebody from a 51% attack that wants to accumulate until it's all out. And when it's all out, and by the way, when it's all out, of course, 51% attack is almost impossible just because of the cost of accumulating that many coins. But yeah.
But from the perspective of a government, if they want to compromise the network now, they just have to seize 3 out of 5 core staking nodes.
I see. Okay.
And the question is, are they even geographically distributed in a way that prevents one government from doing this?
Well, when you say a government is going to attack you, I would have to believe don't count us out, but if someone was going to target us this early, my expectation is not the same as Charlie's, that it's going to take a year to get to 1 million. I believe that we can run this whole thing in a year. That is my goal, 1 year. And the reason why is because what you just said. All right? The reason that we have to move with such alacrity is not because I want it to move. It's because I don't want to happen what you just said. Right now, it would be very easy to take us down right now, just like you said. But right now, we don't have any value. We're worth like nothing. Tens of thousands of dollars is our market cap, tens of thousands. Okay, something like that. I mean, it's nothing. We haven't made a dent. Nobody's using us yet. You're the first podcast. Did you know that you're the first YouTube streaming podcasts that we've done to any kind of an big OG audience.
I guess you
We were
reached
on,
out to a bunch of people, and I was the first one to answer because I was intrigued when I saw the name of Charlie Shrem launching a new project.
we're actually booked every day this week now. Okay, and it's going to continue, but we haven't actually wanted to get out there yet because we didn't know what the reaction would be to the product, and we didn't know what traffic would be on the website and what would be the bounce rate and where were they going and what were they looking for. And then we redesigned it and moved everything to the top, and now we're redesigning it again based on that. And so also we did find some problems. Someone sent to an address and clipped off the 5 because of where they were sending it from. And so we had to figure that out. And so we've really been beta testing to friends and family. And so when I say that you're the first podcast, we're literally just now beginning to tell people. We haven't told like anybody yet. So I'm excited to see now if what we think is going to happen is going to happen. And we'll go from there.
So why did you go for 5 core staking nodes and not 7, 9, 11, or a much larger number? Or do you expect to expand it in the future?
Yeah, the team that I've got that's on security is just fantastic. They really are. They're the Black Coin Devs team, as well as our own security team and our server team. I feel very confident that those are secure, but when you say a government attacking me, I just think it's a little early. I think a government could attack and change election results in major countries. So who am I? But if we can move really fast and get this thing distributed, like I said, the first 1 million people take half the coins. We're no longer 51%. Those are distributed. Now the chance 51% attack falls. So how fast we get to 1 million is how fast I can prevent happening what you just said. Because the government will just shut me down. Well, shit, they'll just come pick me up in a black truck or a van or whatever it is, and they want to shut something down. But we got to move fast. That's all, Vlad.
So you mentioned you have a very good team that works on security, and I'm curious how they're getting paid. Are you paying them in DGD or USDT that you get from people who buy DGD, or Bitcoin from the Treasury?
No, so there are, like I said, there are about 30 people. A lot of these people have been involved with me, some of them 15 years, some of them 10 years, some of them 8, some 4. The newest people have been with me for a few months because we're starting to grow kind of fast now. The 1.1 million digital gold that were held back, pay them over a period of time, right? Okay, and that's fair. The other thing is that my partners and I, not Charlie, I have 2 other partners, and collectively we spent millions of dollars on this, and we paid the Black Coin team out of our own pocket. We paid our security guy, we paid our designer, we paid our web guys, we paid everybody out of our own pocket. We continue to do that. We pay out of our pocket, and these people earn digital gold. And going forward, I believe that there is an opportunity for a lot of these guys to manage mining pools, if you will. They're not mining pools, pools of servers that have wallets on them. Let's say that we get to the point where we're at level 800 and that round is $1 billion. I'm making up a number. I don't know what it is, but let's say it is. Let's say that level is 100 million, 500 million, $1 billion just to sell out that level. I think at that point, you've reached a true tipping point, if we can reach that we will see people coming in, family offices, BlackRock, Goldman Sachs, hedge funds. I believe that we will see people coming in, nation states, whatever, that also want to accumulate this before it's done, before it's just available on exchanges. And to do that, they're going to have to set up thousands and thousands, potentially tens of thousands of servers and nodes and run them and take care of them and manage them. And I think there's a business there, but we're not a business. So as far as funding all these guys going forward, I think that they're going to have their own opportunities, just like Joe Lubin and Consensus, to go make money outside of this. But their work's done. It's been created. It's over.
But you mentioned that this is not an ICO that takes 15% of the pre-mine to give it to the founders or something. But there are some coins that you're using to pay for security. I presume that there are some coins that pay for your contributions.
Out of the 1.1 million. I already told you that. Those are ours. That's the founding teams. I can deliver those out. I gave you some coins. Where did those come from? You got some of the 1.1 million coins. I can't touch the treasury. You see that. The treasury has every coin accounted for. So when we pass out
312 coins right now.
I know, because you found that bug. Did you tell them about that bug you found when you were talking to me yesterday? And
it was on Friday, not yesterday.
You saved me from potentially having to do a hard fork. That was a good bug bounty that you got. And you got 210 as a bug bounty, but you got those others because you figured out how to hack the system and create sub addresses on your single node and make it look like you were signing up new accounts. And I am too trusting and didn't think people would do that. So thank you, Vlad.
That's the easiest kind of attack. And I didn't say it because maybe it would make you look bad. But basically, what I did was to generate a bunch of addresses, and I signed up with different accounts that I made up. And I just collected free coins from your faucet.
Yeah. And how long did it take me to have my engineers turn that off once you told me that?
30 minutes or something.
Oh, it was not 30 minutes. It was 3 to 5 minutes. It was over. And that's why you got a 210 coin bug bounty, is because I just guess I like to believe that people will add value and not steal. And when someone's just flipping coins out of the treasury without adding nodes, which is the whole point of this community, I just didn't think people would do that. And so I'm glad that I caught it before we went live. Thank you. And not we caught it, you caught it. You showed me that it was obvious, and I appreciate it.
So how does it work today if people want to claim their free coins? Did you set any security in place?
Coins. There are no free coins. That's over.
So how do you expect the distribution to happen naturally with people running their nodes?
I believe that people, again, the only way you can get coins then, it used to be you had a faucet. I wanted to run the faucet all the way to 100,000 nodes. I wanted to give out at least one coin, even when we're up there at the higher levels, to get us 100,000 nodes. And I thought, this is going to be great. We're just going to continue this track. And then you showed me that. Well, I don't have any way possible, because the Bitcoin wallet does not allow us to see which IP address is yours even. We don't know who you are. We can't communicate with you. And so I had to turn it off completely. There is no reward. Now, if you want coins, you have to pay a contribution, or you have to refer a friend that contributes and earn a bounty of 10%, as many coins as they buy. That's it. I wish it wasn't, guys. I wish to God that I had a way to absolutely guarantee that people can't come in and fuck us. But
at the same time, now that the only way to get DGD coins is to buy them on the website, it sounds like an awful lot like an ICO.
No, I said to contribute and go through the participation. I said to pay to contribute. I never said buy. You said buy.
Let's say get.
Because you don't have to participate. You could refer other people, or you could just buy them when they come out on an exchange. And in the meantime, you're hoping the value goes up for everyone else. I don't know why you would do that, but I figure that people are either going to refer their friends and hope that they validate so they get some coins, or they're going to validate themselves, or they're going to buy them from some friend of theirs, I guess. I don't know.
So
who knows?
You're saying that you're encouraging peer-to-peer markets to get built so people trade in person.
The whole cool thing about this product is that it's built on Bitcoin rails. So it can easily integrate to BitPay or any Bitcoin-based exchange or any Bitcoin-based wallet. And so the rails that we sit on will be those. As far as peer-to-peer, right now, you and I, could exchange digital gold. Right now, I could sell you these glasses for 10 digital gold, and you could send me 10 digital gold right now if you wanted to. That's about $1. Okay. If you wanted to. So peer-to-peer it already exists, and there's no transaction fee that anyone gets. And so it's absolutely not a money transmitter device. There's no transaction fee. And you can't call it an exchange. We don't need to register with FINRA because it truly is peer-to-peer and there is no success fee. So no, it's ready to go now.
I'm not sure I got a straight answer out of this one because we
Well,
got a bit
question.
sidetracked with my bug
Give me your
bounty.
question again. Give me
So
your question again.
what
Let me make sure.
percentage would you estimate that is allocated to the team right now?
I told you that it's 1.1 million out of 21 million, and we get it over 1,000 levels. No one's going to be selling any of those coins. I bet my life on it that my team, my direct team, now you sell your coins, you can do that. But no one on my direct team is going to sell any coins. You're going to see the big wallets remain big wallets. Okay, that's it. But 1.1 million compared to 21 million is about 5.24% or so. And that's exactly the size of the Satoshi wallet. And so I think it's absolutely fair if we bring it. And by the way, it's worth nothing right now. It's worth 5%, not even, because it's not all allocated to us yet, but it's worth essentially 5% of $10,000 or $50,000 or whatever. It's worth nothing. If it's worth something, it's because we worked our ass off and we got it across the finish line. So we earned it. Just like Satoshi earned his. I think it's totally fair.
Okay, and once again, it's all on the public blockchain, so people can observe.
Yeah, and watch those big wallets. Watch every wallet that has 21,000 coins or more. Any that has 10,000 coins or more. Any that has 2,100 coins or more. They're not going to move. They're never going to be sold. Not until they can be spent. And even then, why spend them?
Would you mark them and say these coins belong to Jedi, these coins belong to Charlie Shrem's wallet? Just like you mark the staking wallets?
Say that again? Sorry.
So the staking wallets on your webpage are marked.
Yeah.
And it
says
says
could we
clearly,
mark those? That's a great idea, Vlad. I will absolutely mark those. What a wonderful idea.
Just put a label and say this belongs to
Jedi.
No,
I love it. I absolutely love it. Absolutely love that. Thank you. I will absolutely do that. Brilliant. Brilliant. In fact, let me just tell Michelle right now. 1 second. I need my reading glasses. I'm getting old, dude. I'm getting old. Oh, there he is. Cool. Page 9. Okay. Alexander. The changes in medicine and start on them after exchange amount of deposit per. Okay. Please update the white paper right away. Thanks. And now I'm going to jump over to the Blackcoin dev and say, please label the deposit wallets large for the team so that everyone on the blockchain can track founders' coins. I love that. I absolutely love that. All right, that'll happen. And I'm going to tell them, contact me about what the labels will be. I don't want to dox anybody.
You can put pseudonyms, but it's important for people to know that they're members
100%.
of the team.
You know how the Ramones had, all the Ramones had their name, then their last name was Ramon. We'll do something fun, something. But it'll be clear that those are who those people are.
You guys are dancers. You're not musicians.
We are dancers. Do you know why?
No.
Okay. So if you go to Digital Gold Jedi at X and you look at the video I have pinned, it's how to start a movement. It's a TED Talk. And it starts with one crazy fool who just gets up there on the hillside at a rave or something, and he starts dancing, and he looks like a fucking idiot. Okay? But he's willing to. That's the important thing. He's willing to look like an idiot until the first person comes along and joins him, the second dancer. And they turn that lone nut into a leader, but they are not the real leader. The real leader is the second dancer, which is Charlie. The second dancer is who everyone else emulates. They're the ones, they're not the first dancer. He'll get credit for it, but it won't be him that makes this move. And then once you have the second dancer and then you have the dancer's friends come over, now it starts to move and it starts to become a tipping point and you get a movement. And now you've got to hurry if you want to be part of the in crowd. I mean, you got to watch the video. It's fucking hilarious. It's like 2 minutes long. I'm the first dancer. That's all.
And there's also this quote in the middle of the front page. It says, "Digital gold is how Satoshi would relaunch Bitcoin today." And that's by Charlie Shrem, founder of the Bitcoin Foundation, founder of the Digital Gold Foundation, and also it says that he's the chief evangelist of the project.
Yeah.
And you're the first dancer.
He's the second dancer. So whenever you have an idea, and especially if you've been grinding out that idea for 15 years, right? You get to a point where you think that you might have just drank your own Kool-Aid and that maybe this idea is not as good as you think it is. You may have convinced yourself of it. And so you need that litmus test. And so for me, Charlie was that litmus test. He looked at this and then he introduced me to some of his OG friends and they liked it. And then they introduced me to some of their friends and they liked it. Okay. And then we went back to my investors and we talked about it and we said, yeah, let's really do something here. And so about, 4, 5, 6 months ago, we really started putting this into production of, okay, this is serious. This idea has passed the litmus test now. People like it, at least enough to give it a try. And so Charlie being the second dancer was a huge thing for me. And when he said to me at that first meeting that he believes this is how Satoshi would relaunch Bitcoin if he did it today, I mean, that was for me that litmus test. That was such a big fucking moment because somebody that knows said, maybe, let's try it. And that was a big deal for me. So yeah, we put that quote on the website because Charlie, I have him on my phone as Charlie motherfucking Shrem. He's a badass motherfucker. He went to prison for this cause. He came out with a smile. He still has love in his heart. Didn't burn anybody. I love that guy. So, that was my litmus test. And so that's why that quote is there, is because I think that should be everyone's litmus test. This is at least worth trying. Why not? Let's try it.
Okay. I think I've asked pretty much all of the questions. I tried to inform my listeners the best that I could about everything that concerns this project and basically front run every possible FUD that may come out regarding this project. It's out there. People can listen to this. There's a reaction from you and from Charlie in the first part about everything concerning this. I will probably sell my coins the moment that I can just to prove that the market has enough liquidity to absorb it, because that's also important in a free market.
Absolutely. I can tell you that there will be an exchange that will be baked into the website. We're finding that one of the issues for non-crypto people is they don't know how to get USDC or USDT. They don't even know what that is. And so they have many steps to take. We send them towards Kraken and Coinbase, but, because we just want to make sure US users are compliant. But the fact is that it's difficult, and we know that. And so we're creating a new system where it's going to say new to crypto, click here. And when they click there, it's going to take them step by step and walk them by the hand with diagrams. And it's going to let them just buy some USDC right there through this exchange that's baked into our website. Right there. And they've actually now signed up for that exchange. So that means they can go sell it on that exchange if they so choose. And that is not a long way away. I would say that's within 30 to 45 days. Okay. And so I would love you to go out there and sell your coins. And hopefully at that point, they'll be worth $1 or $2 a piece. And you go sell them for $400. But I want you to come back 10 years from now, and I want you to tell me about the 2 pepperoni pizzas you bought for
you can buy me pizza
a lot of money.
I'm gonna agree. Let's have the
Vlad,
pizza
I would
moment.
love to. I mean, I would love to have you as an advisor. I'm sure you could earn some of those 1.1 million coins yourself if you were so inclined. I think you're brilliant. I really appreciate that you were the first podcaster. You were very kind, frankly. You're very kind. Any startup of anything is going to have holes. We've tried to plug them all. Every one you've shown me, I plugged. Okay. Show me another one, I'll plug it. And we appreciate it. Pay a bounty. The name thing on the wallets, thank you again for that. I think that gives much greater transparency, and that's really critical. So thank you for your time today, Vlad. Thank you. Appreciate it.
Likewise, and best of luck.
All right.